Welcome to Mind Your Business. I'm your host, Bob Burnett. I'm the CEO of Barefoot Mining and the former Chief Technology Officer for the personal computer company Gateway. On today's show, I welcome Jaran Mellerud, who is part of the Hashrate Index, one of the great sources for mining information in the industry, and also an analyst for Luxor. Today, we dive really deeply into the world of mining. And with that, let's join my conversation with Jaran.
Well, welcome, Jaran. Thank you so much for joining me on Mind Your Business.
Yeah, thanks so much for having me, Bob.
Awesome. Well, you're coming to us from Norway today, so you're and it's noon here in Florida. So I appreciate you giving up part of your evening to spend time with me and our audience. I thought I've got a lot of things I'd like to talk to you about today, but I thought maybe I want to just start with a few real current event things. And right now, hash rate's been, for the most part, ripping. It's actually down the last couple days, although I know that's always just an estimate. But I'm just curious what thoughts and observations you might have, just kind of where we are and what you've seen over the last handful of weeks, because we've just been, as I said, we've just been ripping in hash rate.
Yeah, so since in 2023 so far, hash rate I think is up by about 20%. And that's quite a lot. Like the average growth since, let's say, January 2020, I calculated it yesterday, is 3% over per month. So we have seen like 7-8% growth monthly in 2023, which is much higher than normal. And I don't really know what it's caused by, but I think the biggest factor is the big miners who had equipment just who didn't plug it in yet, and now they finally have built out infrastructure and started to plug it in. Like Marathon, for example, has a goal of 23.3 exahash by Q2, and they started to plug in a lot. So see big miners like that plugging in, a lot of XPs coming online now.
Yeah. We have some in our operation that we've brought online. We're to be honest, we're in the process. We're not certainly at the scale of Marathon, but we're doing a new deployment as we speak. I have a team in South Dakota that's deploying. It's a couple hundred servers that we're bringing up right now. That'll be up over the next couple of days. So I think what's kind of interesting about that is there's always been, I think, a belief that there's a certain relationship between hash and price, but that's kind of been blown to hell, I think, for quite a while, actually. And so it gets difficult to somewhat predict what might be happening.
Yeah, and the funny thing is, I was talking to an investor yesterday who considers investing in Bitcoin mining, and he sees like now when the Bitcoin price increases, then hash rate immediately increases and difficulty increases, and the big difficulty growth is eating up the higher profit margin in Bitcoin mining. And he is afraid that this will continue for like a long time,
Yeah.
But I don't think so. I think it's only during the next few months that the hash rate will keep growing, and then this, because all the hash rate growth now, it's result from orders made 1 year ago coming online.
Yeah.
And it will not take many months until all these machines have come online, and then the hash rate will, I think, will stop growing.
Yeah, I agree. I can say, again, as a miner, that when I look at the availability of equipment right now and the pricing of the equipment, it's quite good, right? So, anybody willing to deploy capital and has a place to plug them in, can get access to it pretty quickly. And, that tells me that there's not a lot of investment going on right now. There's, as you said, I think that investment decisions that were made in the past, some of them maybe even a year ago or so, are kind of coming about. And I kind of look forward to that day, frankly, because I do this little exercise, and I've been somewhat wrong about it, but I'm going to ask you kind of your thoughts about it. So what I'll do is I'll say, hey, what if we wake up tomorrow morning and Bitcoin's at 50,000? What will global hash rate look like in the following week? So because it'll somewhat say how much is actually just turned off waiting to cross some threshold. So I'm curious if you have a thought about that.
Yeah, I haven't made an estimation, but I would think there's my intuition says about 50 exahash, something like maybe even a little bit more, maybe between 50 and 100 somewhere. So it will probably take the hash rate to more than 400 exahash.
Okay.
What do you think?
That's a pretty big number. So your belief would be that well, what would that be? That'd be, we'll call it a 30% increase, something on that order, something like a 30% increase is possible. Yeah. I would probably be more in the 20% range, but we're not off by an order of magnitude or anything, and then it would stop, as I guess to the point you were making before too, is though, then if the price then leapt to 70,000 or 100,000, the hash rate wouldn't respond anymore. It would be exhausted. At least that's my belief.
Yeah, exactly. So it's now we see that the hash rate really following the Bitcoin price, but as you say, when the Bitcoin price reaches a certain level, there will not be any more hash rate on the sidelines. And then we will see the real profitability increase if the Bitcoin price keeps increasing.
Yes, I think the same thing. Now, the opposite is I think a worthy mental exercise too, which is if we fell back to 12 or 15 or something like that in the price, how much would turn off within a week? I'm curious about your thought there.
Yeah, we at Hashrate Index, we actually wrote a report about that called Hash Price Resistance Level. Mm-hmm. I didn't participate in the writing, but I still was paying quite close attention to it. And the point of that report was trying to validate or invalidate the hypothesis that there is a hash price floor. That if the Bitcoin price falls to a certain level and the hash price falls, then the hash rate will really much drop, so that it evens out the hash price. So the hash price will not fall anymore. And that report concluded that this hypothesis is false. So there is no hash price floor. But there is a big resistance at around 15,000 Bitcoin price. Yeah. So around that level, a lot of hash rate will just drop. And I've been seeing it myself when I researched the economics of the public Bitcoin miners. So most of them, they have a break-even Bitcoin price of around between 12,000 and 15,000 dollars. So. Yeah. Even low-cost producers like public miners are fairly low cost. Even they will go offline if the Bitcoin price were to suddenly drop to 15,000, 12,000, something like that.
Yeah, I can say I'm a private miner, and we don't typically talk a lot about our financials or exactly how much hash power we have. But I can say that I would completely concur that it's right in that range where we hit a pain threshold that is really difficult. And we kind of touched the upper end of it. We kept going and had belief it wasn't going to stay there long, and we were right. But yeah, when you see, sometimes people will try to calculate the price of producing a Bitcoin, and I think a lot of times the analysis I've seen misses some major components of that. That certainly energy is the biggest cost component, but there are lots of others: rent and insurance and people and these other things that are big numbers. And then if you throw in depreciation, which is maybe a non-cash cost, but it's a real cost in the respect that there's a certain lifetime value of the capital investment you've made. You get into that range, and so some may be a little higher, some may be a little lower than that number, but it was very scary down there. I can say that. Even the relief back to the low 20s, even where we are now, has takes some pressure off. We're not thriving, and I think that would be the case of pretty much everybody in the industry. I don't think anybody is thriving, but there's probably a sigh of relief in a lot of boardrooms in the current state.
Yeah, that is guaranteed a lot of sigh of reliefs everywhere now. But it's a great point that you brought up, that most people, they tend to focus mostly on the energy cost of producing Bitcoin, but that you actually have so much cost in addition to that. I got into this industry by first an analyst, and now I work at Luxor. Now I actually work with Bitcoin mining. And during my time as analyst, I mostly looked at the energy cost of producing Bitcoin. And most public miners, which I studied, they have a production cost, energy cost of about 12,000 per Bitcoin.
Yeah.
But I just thought that basically that's the entire cost. But now I see how much other, like I visit different facilities and I see how much equipment they need. You actually need people in there to do the work. It's actually quite hard work.
Yeah.
And so yeah, it's a lot of costs that a lot of people don't think about.
Right. I'll give it, one that very few people think about is insurance. So if you have even a small facility, let's say one with a couple megawatt facility, but you have several $1 million of equipment in there, and the insurance industry, at least in the United States, kind of looks at it as a higher risk venture. They going back, I've been doing this since 2017 when we first started. They kind of viewed us as a data center, and we got, I think, reasonable rates. Well, we never had a claim, not a single claim in the whole time of our company, but there were a lot of miners out there. I think a lot of people who tried to scale up who didn't have the right backgrounds to maybe do that. And there were fires and there were electrical issues and a lot of machine damage and a lot of claims. So the property and casualty insurance industry in the United States said, no, we're not going to treat you that way anymore. And it's a different category. It's much more expensive. And in fact, a lot of carriers even refuse to do it. A lot of big name insurance companies wouldn't even provide insurance. And so it's a real number we pay every month just for the insurance. And as I said, I think very few people probably appreciate it until they get on the inside of it, and that has to all add up, right? The cost of production in a gold mining company, you would add up the cost of the energy and the cost of maintaining the trucks and the cost of the people and the cost of the insurance and the property tax on the land, and like all those sort of things would come in. And I think as we mature, maybe more people will appreciate what it really takes to run a business.
Yeah, I like that you bring up gold mining, because it's my favorite industry except for Bitcoin mining. And if you look at the gold mining companies, it's an interesting case study for how the future of Bitcoin mining could be, because gold mining is a very mature industry. It has existed for like 200 years or something now. So you can look at the different cost levels there, and I estimated the like general and administrative costs for the biggest gold mining companies, and it's about 3% of their revenues on average. So very, very low. And the Bitcoin miners, public ones, I think it was like almost 40% on average or something like that.
Oh, I hadn't heard that number, but
yeah, it's very high because of high executive compensation, but mostly because of high executive compensation, but also because of this like insurance and other general and administrative costs that people not really consider.
Yeah, it's I would say, you know, for anybody out there who's thinking about getting into the business, I would say, you know, make sure you take the time to really go through and create a pro forma, and, you know, you can research the public companies and see at least what the expense categories are, right? And make sure that you've considered all of those factors in the equation. And I would say, you know, I think I'm still optimistic about the business. I think, you know, we've survived. I think the companies that have survived will have a decent survival rate over the next 12 to 18 months, but it's hard. And, you know, we have a halving a year away roughly, and a lot of factors to think about. We'll probably come back to talk halving in a little bit. Before we get to some of those things, I'd like to look back a little bit too, because I think I've been thinking about, you know, what happened to the whole industry over the last year, and specifically not just Bitcoin in general, but also the mining industry. And I think that in hindsight, we can look at the China mining ban as almost a bad thing, that it was maybe like a Trojan horse for a lot of people in the mining industry, a lot of companies in the mining industry, that created almost too good of a environment. And there was a massive overreaction, and the boom then created a bust. And you know, I wanted to get your perspective on that. You know, was it a good thing or a bad thing?
Yeah, so in the beginning it was a good thing, but as we know, good times create weak men, and we saw that after a few months after the mining ban in China. So you had this like synthetic, like really unnatural increase in hash price due to this mining ban. Like 30% of the hash rate just disappeared.
Right.
You had a huge increase in hash price, and it led to the most profitable era in Bitcoin mining's history, at least in the modern history of Bitcoin mining. And a lot of players from traditional finance and outside the mining industry, they didn't understand that these profits wouldn't last forever. They didn't understand that, so they just threw capital into the industry, and we see the results of that now, and that's also why the hash rate is increasing so much now. It's all that capital which was thrown in, which is just getting deployed now.
Yeah,
in the bear market.
I find it interesting. Most Bitcoiners, at least, like to be amateur economists, and most are familiar with the Cantillon effect, and you know how money flows to those closest to the money. And I think you could make an argument that was the case with the public miners, that being bigger and being closer to this cheap money, whether that was capital raised through the IPO or access to lines of credit and things like that. And what they did was behaved in a very fiat way. They ruined price discovery for the mining equipment, and really misallocated capital, like a kind of across the whole Bitcoin ecosystem. And any thoughts on that?
Yeah, I 100% agree. When you look at it in hindsight, it was a complete misallocation of capital, and we can still see it play out actually, because if you look at the pricing of the Antminer XP, you can see it has a huge premium compared to the S19j Pro, for example.
Yep.
If you look at the price per terahash basis. And that's because these public miners, I don't know, they just want to buy the most efficient miners for some reason. I understand it's good to have an efficient miner, but not if it's much more expensive than the other miners. So
yeah,
I agree with you there.
Yes, I agree. Yeah, I mean, it's situational. I think there are certain situations where it still might be the best choice, but I would say on the whole, as we sit here today, we're not purchasing that product. We're purchasing some other ones as we're, and we tend to grow not in big leaps and bounds, but in small increments. And I think that's true for a lot of private companies, because we don't have a big pile of cash there. We find some liquidity, or we find some organic growth and profit, and then we redeploy it. And so, it might be buying a dozen machines. It might be buying 80 machines. It's not 10,000 machines.
Yeah, it's like when I first started in this industry, I mostly just did analysis of the public miners. But after working here for a few months, I can see that private miners are operating much better than the public ones.
Yeah,
so they are. Private miners are much more strategically deploying capital. They are, as you say, they're often like buying a few rigs here, a few there, if they can find a good deal. While the public miners, they just like raise a ton of money and just pumps it into the market at the same time without considering even the current state of the ASIC market.
Yeah. Well, I think I've made this statement a couple times publicly, but I believe it is impossible for a public miner to operate their business within the ethos of Bitcoin. That those are diametrically opposed statements. Now, they have the right to exist and do that. I can't stop that, but I think that by the very nature, we talked about the Cantillon effect, but you must measure your business in fiat. You're forced into kind of thinking about things in large part in 90-day cycles. The culture of the company, and I used to be a C-suite exec in a Fortune 200 company, so I understand that, the mentality and the pressure of being a public company forces you to operate completely differently than a private miner is, which, private miners are typically owned by a small group of people who can collectively decide what their optics are and their goal and their vision, but a public miner, they can't.
Yeah, I agree. And it's a little bit scary actually that now about 25% of Bitcoin's hash rate is public, but I can't see that increasing for that long, because the public miners, they will probably stop growing their hash rate later this year. And after that, the reason why they have grown so fast is because of access to capital was extremely good a couple of years ago. But it's not like that anymore. And it's not going to get easier, at least in the next couple of years, I think, which will lead to public miners growing slower than the rest of the network.
I think that's fantastic. I think it's the healthiest thing for the network, by far, that we have diversity, because I've written as well. I won't belabor it today, but I think that if the industry got on a path that moved more toward total dominance of the hash rate by those types of companies and the types of facilities they tend to build, which are they build a small number of massive facilities, instead of like the way we work is, we'll find a megawatt of energy at a great price, or we'll find an off-grid source of even a couple hundred kilowatts, and we'll implement that way. And so there's geographic diversity, and there's diversity in power source, and we're not, but they go completely the other way. They're all about consolidation, what they perceive as operational efficiency, and I don't think it's not healthy for the overall ecosystem, especially, well, if they got too big. Right now, I don't think it matters, but if they were 70, 80, 90% of the hash rate, that could be a problem. So do you think, Jaran, that when we hit the halving, does that create some sort of reset in the industry?
I haven't thought about exactly that. I have decided to set up one day during maybe a weekend, just to sit and think about what will happen after the halving, because it's such an important moment. If you look historically, it hasn't really been any big changes in the industry, except that the Bitcoin price has gone to the moon after.
Yeah.
I think the same will happen again, like to be honest. And I think most other people expect that. And of course, if the Bitcoin price increases substantially, then it doesn't really matter if the Bitcoin reward is halved. But at the same time, I still think we need to be very conservative in our estimations about the future when modeling out investments. So yeah, I think the Bitcoin price will increase to offset the effects of the halving. But if that doesn't happen, then it will lead to a lot of bankruptcies, and we could see 20-30% of the hash rate just being forced away from the network in a matter of weeks. And if you look at the break-even electricity price of mining right now, if you use the S19j Pro, which is the most popular miner, you have a break-even price of about, I think it's about 10 cents, maybe a little bit less.
That's about right. Yep.
And if the Bitcoin price doesn't increase after halving, the break-even price of S19j Pro will be 5 cents. And that's close to the average price of electricity.
Yeah.
Which means that if you don't have below average electricity cost and you use a fairly efficient miner, you will be in big trouble. So yeah, I think also during the next year, I'm not sure that the S19j Pro will stay competitive for miners who have above 5 cents electricity price. So I understand why a lot of miners buy the XP and M50 and those models. It's to secure their position after the halving. So I understand that perspective.
Yeah, it is, as you said, it's the trickiest thing for our own business. I have a model that I maintain personally for our business where I'm trying to predict global hash rate in different scenarios. And again, another thing for those of you who might be interested in getting in the business, I'll share that we typically are only interested in mining equipment that we believe we can get 4.5 years of useful life out of. And so it gets very tricky to say, okay, well, we're going to, let's say here it's March of 2023 at this recording. And so knowing that in roughly April of 2023, we'll have a halving, and then I want to get 3 more years out of a piece of equipment. So, what does that look like? And as you said, if we return to, let's say, 45 or 50,000, then based off of current conditions, not a lot changes. But if we hang out below that level, then we get back into, okay, well, how much does hash rate fall? Where will the difficulty adjustment be, and all those sorts of things, to try to say, how profitable will I be? And then there's also some forecasting, although still relatively minor, about fees. I want to talk to you about fees in a little while, but you got to play that into the equation as well, or you can decide whether or not you're going to view it as a factor or not. So when you look, since we've been talking about public miners, which of the public miners do you think are best positioned to ride through this wave into the halving? And let's say price does not recover fully, but recover fully meaning that it doesn't double between now and then, to make up for the halving occurring. Who's best positioned? What 2 or 3 companies do you think are best positioned for surviving to the other side?
I think there are basically 2 companies, 2 public miners that are very good positioned. It's TeraWulf and the Cypher Mining. So 2 are the ones with the lowest Bitcoin production costs, and they are also the ones who started to build their facilities at the latest stage. So they have been quite, at least Cypher have been very good at deploying capital and building facilities. They have a good experience. TeraWulf, they have a nuclear powered Bitcoin mining facility. So you probably know they have about 2 cents. I think it's 3.2 cents in per kilowatt hour in a 5-year PPA, fixed price. Of course, that's going to be competitive.
Yes.
Probably for forever almost.
That could make them last man standing. Yes.
Yeah, exactly. And in this facility, which is quite an underrated point, but it's in Pennsylvania and it's farther north than Texas, so it's not that hot there in the summers. So they can run the facility more efficiently than the Texas miners.
Mm-hmm.
So I think that facility will be probably the last one standing, except for the ones who steal electricity. And then you have Cypher Mining. They also have a quite low Bitcoin production costs in Texas. They have quite a good PPA there. So
yeah,
I think those are the two best. What do you think?
Well, I think that, I agree with you. I think that the ability to control your energy cost is paramount. I'll say we've worked a tiny bit with Cypher. We've been public about it. We bought some equipment from them, and we have a long relationship going back with Bitfury, and Cypher was connected to Bitfury, and so we have that relationship. But I think another way of restating this is I almost view those two as they have better vertical integration. They're not just purely an operator. And I think that that's a tough business model, that as a mining company, to try to survive by just being good at plugging machines into a data center, it's not a sustainable model. You have to do something different in it. Like I mentioned, the equipment we've bought from Cypher are some of our containers, and they're fantastic. The technology they put in place there is fantastic. You may not know this about us, and we're private, but I think this exemplifies we bought an old dilapidated hydroelectric facility in South Carolina, and we rehabbed the whole thing, and we run that off grid. It's not massive, but we run it off grid, and outside of maintenance costs in that operation, we have free electricity. So I think that like TeraWulf, with their relationship with the nuclear provider, I think they've somewhat done something creative there that I think it's going to be hard to just go plug into the grid somewhere and operate a facility and survive long term. You have to be doing something else in there to separate yourself.
Yeah, I have the exact same perspective. You don't have any competitive advantages by just like plugging into the grid, especially if you do it on the distribution level and you need to pay the transmission and the distribution fee.
Yeah.
Then you have high costs and you don't really have any competitive advantage. So yeah, I agree. You have to do something special that most other miners don't do, whether it's going behind the meter, close to the power source, using stranded energy that is not connected to the grid like you do.
Yeah.
I think your facility might be the last facility standing, actually.
Yeah, we're pretty proud of that one. Like I said, it's not massive, but it's pretty cool, frankly. That we just watched the water flow down the river, and we change those molecules into Bitcoin, and it's pretty cool. We're pretty proud of that facility.
Yeah, we have in Norway, where I'm from, we have a lot of these small hydropower plants that are owned. It's like owned by farmers. Let's say they have a river on their plot, their farm, and they just build a small hydropower plant, and they can sell this energy to the grid. But they can also use it to mine Bitcoin, and I think that might be quite a big use case for these smaller hydropower plants. I think small hydropower mining is probably going to be a good way to also decentralize mining.
I do too. It's why we went down that path. And, I would, to those people out there, maybe all over the world, as you've said, don't sell short if you have the ability to even generate 50 kilowatts of hydro. You can do something useful with that. You can go run 10 or 12 or 14 miners off of just that, and you can make a meaningful impact financially for yourself and collectively across the world. That could be very, very powerful. That's kind of obviously my first and foremost thing is I want to be successful in my own business, but I want to see a very healthy mining ecosystem. And so if we had a couple thousand of those, tens of thousands of those, everywhere from a South African rainforest to Norway, that would really make me feel good.
Yeah, and about what you said there, they can like even smaller facilities connected to these hydropower plants can be financially viable. I'm curious to hear your perspectives on the economics of scale in mining. How big facilities you need to achieve economics of scale because my theory is that the public miners invest in these like 200 megawatt facilities. They do it to achieve economies of scale. I'm not certain that you really need 200 megawatts to get economies of scale. Like, what is your perspective of how many megawatts you need?
Well, yeah, I think, first of all, as we discussed earlier, in mining, there is an SG&A cost, right? And so you can achieve some efficiency in those costs by having a single dedicated facility. So that's the positive. I actually think you can find better energy deals in small pieces. I'll share another story with you that you might enjoy. We do on-grid mining too. One of our on-grid mining opportunities was because I won't say the exact location, but we found an industrial park that had more power available to the industrial park than was being utilized. And it was in the sub 4.5 cent per kilowatt hour range. Okay. So pretty good. We found a burrito factory in the industrial park. So literally a place making burritos. And they had excess space very close to the transformer that we needed to feed from. So we worked a deal with the landlord to rent space, and we plopped two 40-foot containers essentially on the backside of the burrito factory, and we mined there, and by the way, it's 3.9 to 4.5 cents, depending on the time of the year. So it's competitive. I think there are lots of those kind of opportunities all over the world where there's some sort of imbalance. So what I've said publicly is I would rather find, like, if my choice was, that was 2 megawatts, right? If my choice was having one 200 megawatt facility or 100 of those 2 megawatt facilities, same total power, I will choose the 100 because of the following. The first is I can get up a 1 or 2 megawatt facility or a 0.5 megawatt facility in a matter of a handful of weeks. So while you start the process to try to build a 200 megawatt facility, you're maybe, if you're like the greatest in the world, maybe you do it in a year, but it's probably more like 18 months, right? So from the time the capital comes in, you have this massive time to get up and going. So that's an inefficiency, right? I could get up maybe the time to get to 200, they're faster, but I have 40 or 50 in place before they have mined their first one. So, and I'm mining, as we know, mining earlier is always better than mining later, right? So that's an inefficiency for them. Secondly, by being diverse in my localities, I become immune to problems. I might lose an ice storm, a regulatory issue, all these different things that could make a mining facility turn off, a problem on the grid, etc. I become insulated from them on the whole. I might lose 2% or 5% of what I do because I'm diverse, but they're always all or nothing, right? And like we saw that with the Marathon facility in Montana, right? The one that went away. So anyway, that's the reason I choose to go the path I go, which is I like to grow in, like I said, our next project will be a 0.5 megawatt. We have found another, similar to the burrito story I gave you, we found another one that's only 0.5 megawatt. So we're going to use one of Steve Barber's upstream containers. We're going to plop that in there. We'll get 130, 140 miners operating there, and we'll do it in 6 to 8 weeks. So did that answer your question?
Yeah, I'm also wondering if you're going to operate like a small facility of 0.5 megawatts. Will you have some employees close to this facility? Will you have like a dedicated employee only for this facility? Or how does that work?
Well, yes. Like the distance between, like we will have, in the case of the 0.5 megawatt one, it will be within 30 minutes of 3 or 4 of the other sites. And so somebody will visit it every day. And of course, we use tools like Foreman that allow us to really see what's going on in it. So if there is a problem with one of the machines, we know essentially immediately that there's a problem. We'll try to fix it remotely if we can. But regardless, it's very rare that a day would go by that somebody wouldn't visit one of the containers, a technician wouldn't visit. And, are the filters clean? Is there some, some other thing that we have to be concerned with? But we're talking about like one person, a technician level person that from the SG&A of the total company, that part is less efficient than the big facility, right? They would have an efficiency gain over us and a person driving in a car around to different facilities. But I don't view it as material, and the time to market being up and running faster with at least some of the facilities, and then also the ability to be plugged in different places so that there's not such a massive dependency on any one facility operating at any point in time is helpful, I think, in that.
Yeah, especially the time to market is extremely important. So let's say with this business model, you can actually invest in mining facilities also during the bull market and make a profit, because you can get your machines plugged in quickly to capture the high profit margin, so you can pay off because of course machines are more expensive in the bull market. But what the public miners do, or the big miners, they spend 18 months to build a facility, and they overpay for that facility during the bull market, and then it gets online during the bear market.
Yes. Yep. And those facilities are complex. I mentioned I worked for a Fortune 200 company. It was a personal computer company called Gateway. We wouldn't have had much of presence in given your age and where you live, you probably wouldn't be familiar with them. But we were a top 5 personal computer company in the world in the 90s. And we had 13 manufacturing locations. This is one of the things I learned. And they were, we had one in Dublin, which actually primarily serviced the European market. But we also had a couple facilities on the East Coast of the US. And part of the reason for that was that if there was ever a problem in Dublin, we could get units from one of the East Coast facilities in the US over to Europe in a pretty rapid manner. We had plant in Malaysia, so we had these manufacturing locations all over the world. And basically if any 2 of them went down at any point in time, we could instantly ramp the capacity up to fulfill the demand. Our logistics costs would go up, but we never had to worry about that. And that's one of the things I learned, about mining, was like, you have to be operating, right? If you're not running, like, there's no way to make up for lost time. That's a strange thing about this business, is like, you can't say, well, I was off today, therefore I'm going to work harder tomorrow to make up for what I lost today. It's gone, right? It's a very strange aspect of our business.
Yeah, and I also wanted to talk about the miners trilemma article you wrote, which I really enjoyed. So it's the trilemma: capital, mining equipment, and energy. Could you tell a little bit about that? And I will tell you my thoughts on it.
Sure. Well, there was a realization that I had that there was if you're putting up a mining site, regardless of the size, that you have to solve these 3 big problems, which is getting the money, getting the energy, and getting the equipment. And the trilemma says, my hypothesis is that at any point in time, at least one of them is always going to be difficult. And as soon as one that is difficult starts to become easy, it will force a different one to become difficult. So I think that the trick of a mining company is to be nimble enough that regardless of where the difficulty shifts, that you have the capacity to still solve the problem.
Yeah. So and right now its mining equipment is easy to get, but capital is scarce and energy is semi-scarce.
Yeah.
Yeah, that's correct. And but my immediate thought is that I think energy is going to become gradually more scarce, and it doesn't really matter if capital or mining equipment is scarce. Energy is just like gradually going to, at least that's what I see in I work in the Nordics. So
Yes.
we have a lot of stranded hydropower here, but it's getting harder and harder to find available electricity. So here energy is extremely scarce. It's the biggest constraint to mining here. And it has just gradually become more scarce. And I don't think it will get like any easier, no matter what happens to capital and mining equipment.
Yeah, you may well be correct. I think in the long run. Now that doesn't mean two things couldn't be hard. That and it may be that energy is always hard, and it's the other two that play off of each other. Which is really what's happened in the last year. Like, that it's really been, so maybe it's not the trilemma, it's the dilemma or the bilemma, because it's really the two things that the mining equipment and the capital that gets hard. Although I think one of the things I'm finding, I'll say, is that as I meet with outside investors, and we do bring in outside investment for many of our projects, that projects like the one I talked about in with the hydroelectric tend to have more appeal to the investment community, because it's not only an investment in Bitcoin, but it's an investment in energy. And I think especially an investment in that case, in a green energy. So that you have to raise more money if you're going to do a site where you're going to also generate energy on site. It's a much bigger capital deployment, but there is a different story. It does help make the investors a little more interested, I think, in the project.
Okay, so you think that if you have access to energy, that can increase your access to capital as well?
Yes.
Oh yeah, that's a great viewpoint, and that also explains why we see a lot of miners in an increasing to an increasing degree investing in energy infrastructure.
Yeah. Well, it goes back to what you said before. I think those companies that survive, we talked about TeraWulf and Cypher, but you have to be adding something to it. The days of just saying, well, I'm going to go buy some equipment from Bitmain and plug it in somewhere and I'm going to make a bunch of money. Well, you better be doing something else beyond that, or you're probably going to get steamrolled at some point, and probably sooner than later, because anybody could do that. There's no special trick. There's no special skill involved.
Yeah, it's no barriers to entry. I like to compare this to the taxi industry, because taxi drivers, they don't make a lot of money, and it's because all you need to get started is a driving license and a car. So
Yeah.
like half the population can drive a taxi. And when I was in high school, when I got my driving license, I used to drive an unlicensed taxi. So I just used my car and drove other people, like friends and other students. And it worked very well for a few months, because I got my driving license very early because I'm born in January. But then as the other students got their driving licenses, it became increasingly hard to make a profit. And like in July, August, it was impossible to make a profit anymore. So I just quit that business. And
Wow.
I view mining the same way. So it might be easy to make money for everyone during the bull market, but this bull market will attract more miners, and suddenly, if you not have a competitive advantage, if I had a competitive advantage with my unlicensed taxi company, I don't know, if I had like a limousine or some really nice car,
Yeah.
then maybe I could survive, but I didn't have that.
Yeah, I love that. I think that's a fantastic story, not just for Bitcoin mining, but just the dynamics of the free marketplace and the way that really works. I'm sure I'm going to use that again at some point, talking to somebody, because that's a great story.
And
I
that's
also
also
think
why the taxi business are always trying to create like synthetic barriers to entry. They're always trying to regulate the industry. Like each city, they want to regulate, so you need a license.
yeah.
But the beauty of Bitcoin mining is that you can't do that. You can't regulate it. Miners will just flee to other countries. So
yeah, that's a great point. Okay, I was just going to ask you something. Oh, so we were talking about bull and the bear market, and I think that what you said was right. The advantage, I would say, as a general rule, I'll state this, my opinion. General rule: you should be investing heavily during the bear cycles and generally slowing down or turning off in the bull cycles. I'm talking about expansion, right? But within the bull, the exception to that is, I think, the smaller sites that you well said is, if you can deploy very quickly, let's say a matter of 6 or 8 weeks, you can bring something up opportunistically, then it's still okay. But you got to be very, very careful. And the time between capital deployment and operation is critical, especially for smaller miners. Like, maybe the big guys live or not, but I think it's a fatal flaw of the big guy strategy, as we talked about, because that time, by the way, we talked about, let's say it's 18 months. Look how dramatically market conditions could shift in those 18 months. Like, you spend all this money, hundreds of millions of dollars, or even $1 billion, to bring up a facility into a market that you don't really know what you're going into. You could have done it in a bull and you come up in a 2-year bear, and you're screwed.
Yeah, you can't. It's true what you're saying. If you invest in the middle of the bull market and you don't get your machines up and running immediately, you will not be able to pay down the machines. Like if you bought let's say you bought an S19J Pro in late 2021 during the peak. Even if you had run that until now, I don't think you would have paid you would never have been able to pay that machine. So I think if you paid like $100 a terahash or more, it would be impossible. So, and it's interestingly, I've run the calculation. Like, I think the best way to look at it is to look at the payback period in months, because that's ultimately what you want to do. You want to pay down the equipment as fast as possible. And interestingly, if you bought mining equipment historically, when the payback period looked high, then you would have made more money than if you bought when the payback period looked low.
Yes.
Like, of course, you should choose if you compare 2 machines at the same time, you need to choose the one with the lowest payback period. But if you just take all the machines together and look at specific times, for example, the payback period looked very low in late 2021 because the hash price was so high. We were in the middle of a bull market. But that bull market doesn't continue forever. So, and now the payback period looks a little bit higher because you're in a bear market and the earnings are very low. So
yeah, but I think it calls to mind the famous Warren Buffett quote, "Be fearful when others are greedy and greedy when others are fearful." And I think it definitely applies to the mining industry.
Yeah, it applies more to the mining industry than probably any other industry.
Yes, yes. Well, hey, I mean, we've been talking for an hour. We really haven't kind of dove into who is Jaran. So maybe let's take a minute or two and tell people, your background. Obviously, you're from Norway. You're working for Luxor now, but what brought you here today? What's your path?
Yeah, so I've been interested during my entire life in making money and business. In my teens, I was very big fan of Warren Buffett. I love that quote you brought up. So I was very interested in value investing. I got into investing in, like, for some reason I like cyclical industries. I like I like real industries, where you actually produce something. You have it can be whatever. It can be a commodity. It can be some landfill. I just like these industries where you have these huge capex investments, and it gets very cyclical and interesting. And I was also interested in Bitcoin for a few years since 2017, and I studied energy management in university, and that's kind of how I discovered Bitcoin mining. And when I also discovered that Bitcoin mining was such a cyclical industry, it's like a commodity producing industry,
Yeah.
then I just fell in love with this industry. So, and I've been working now for about 6 months for Luxor and Hashrate Index. I do research, and I also work with business development. So I help expand Luxor's presence, mining pool, firmware, derivatives, and so forth. So I really love working in the mining industry. I don't think it's anything any better industry to be in.
Yeah, I'm an old man, and I'm thrilled to, at this point in my life, have found something as exciting as the personal computer industry was, because I started in the personal computer industry in 1986, and I spent 20 years there, and it was marvelous. Like, it was part of a revolution in the world, right? That still to this day, hundreds of millions of personal computers are sold every year, and they connect people to the internet. And being part of the very early days of that was, I think, really a gift. And I frankly never thought I would have the opportunity to be involved with something that exciting again. And thank God I was wrong. And my advice to young people like yourselves is find some way to be involved in the Bitcoin ecosystem. Mining is wonderful, but if you want to be in custody, or you want to be in Lightning, or you want to be in something but get involved, because when you work in an industry that changes the world, like you get a lot more than just the financial benefit. You get this like feeling of you've done something useful. And no disrespect to like the taxi industry or all the taxi drivers out there in the world, but at the end of the day, I think it's difficult to sit back and feel like you've made like a major impact on the world, that what you worked on changed the world. Because if you weren't there, somebody else would have driven the taxi, right? And I don't mean that in a disrespectful way, but geez, if you get this opportunity to be involved, like, geez, be involved.
Yeah, I've been thinking about that. Yeah, it's an industry which is completely new, and you can look back 5 years ago and look at how far the Bitcoin mining industry has moved in just this 5 years, or even just 3 years. And it's crazy to think about how it might be in just 3 years from now. And
Right.
it's so cool to be able to take part of that.
Yeah, it really is. We through my company, we are a customer of Luxor. So we've actually bought equipment from Luxor. We tend with our sites, by the way, is to use different pools across different sites. Again, we try to create as much insulation as we can and create diversity, but we do use Luxor in a material way in our as a pool as well. I'm curious what thoughts you might have about kind of the state of pools. And, we've seen especially Foundry develop a massive presence, approaching 40% of global hash with Foundry. We don't have a lot of time left, but I'd just be curious what thoughts you might have about the state of pools and any concerns that you might have about the state of mining pools.
Yeah, so now Foundry and Ant pool together have more than 51% of the network, so they could theoretically go together and do a 51% attack.
Yeah,
I'm pretty sure they won't do that, but
yes, me too.
It's a consideration for the future, because in the future, like if Bitcoin is going to exist for, I don't know, hundreds of years, and is actually, it needs to be a decentralized network. And by the law of large numbers, that if mining pools, like one or two pools together, have the control of more than 51% of the network for like 100 years, one day they're going to do a 51% attack. I'm quite sure about that. And some people are claiming that, yeah, miners or mining pools don't have an incentive to do a 51% attack, because then it will undermine the trust in Bitcoin, and the Bitcoin price will fall. And yes, that's correct right now, because Bitcoin has competitors like other monetary systems. But if we have a situation with hyper Bitcoinization, where everyone just using Bitcoin and it's the only system people use, then it's no disincentive to do a 51% attack, because then people don't have another choice than to continue using Bitcoin even after it was attacked. So you can look at it, for example, the fiat system, like the central banks, they're still just kind of 51% attacking the fiat network by just printing a lot of money. They're still doing it, even though it undermines the trust in the system. But it's because people not have any other choice but to continue using it. That's why they can do a 51% attack. So I don't buy that argument that mining pools are not incentivized to 51% attack. Yes, they're not now, but they might be one day. Yeah, so I think the Bitcoin mining layer is going to stay decentralized for a very long time, like probably forever, because it's such a competitive industry. It's no barriers to entry. So it will stay. I think it will be the most fragmented industry in the world. And so I'm not worried about 51% attack on the mining layer, but I'm kind of worried about it in a very long-term basis in the mining pool layer. And I'm not really sure about how to fix it. Like we have this Stratum V2 protocol, which takes this power away from the mining pools to choose transactions. But yeah, I'm not really sure. I think Bitcoin might have a problem there long term.
Yeah, I agree with you. I'll say the first thing that I really liked in your response to that was that you're thinking in terms of hundreds and hundreds of years, because I believe, I'm an engineer, you're a numbers person. I think what we're attempting to build is the money for the next 1,000 years, right? The monetary system of the next 1,000 years. So I think it's very common for people to easily discount things that they perceive as having a very low percentage. So let's say there's a 1/100th% chance in any given year of a 51% attack. Well, over 1,000-year period, then it becomes highly likely, like that it will happen, right? So people have a tendency to think of the here and now and in the next year or two, or between now and the next halving, or even the next decade. Yeah, it's very, very small. But if we allow the market to go, the industry to go too strong in one direction, sometimes it gets hard to reverse course too, like to say, oh, now we're at a danger point. And I also want to say that the dangers go beyond just 51% attack. There are things like transaction censorship, that it wouldn't be a 51% attack, but if you took Foundry and Luxor and F2 Pool and Ant Pool, and let's say there were the 4 or 5 biggest pools got together and said, yeah, we're going to ban these addresses, whatever. We're never going to process anything coming from these places. I mean, to me, I view that as a massive attack on the integrity of the network. So anyway, the point being that it doesn't have to just be a 51% attack. You know, the attack could be just on people's confidence and reliability as well. And I think that's, and I've talked to my friends at Foundry. If any of you are listening, I've because they are the big ones. I've spoken to them even in the last 2 weeks, saying, I have concerns about adding any additional of hash power from my operation into those pools for that very reason. Like I can't be part of even throwing another petahash on top of that number, because it's just too dangerous. And it's not a lack of trust in them or in, and by the way, Luxor, we're still expanding, but, and a few others. But I think it's important. We only have, the last time I checked, in a 30-day window, only 15 pools had mined 1 block. There's only 15 unique pools that had mined 1 block. That's too small. I think, I'd feel a lot better if that was 100, right? Or 200.
Yeah. I also, but unfortunately, it looks like pools tend to centralize because, of course, you have the economy, you have massive economies of scale by running a pool, and you need economies of scale. But I think like Foundry has become like they have become big by subsidizing they give miners 0% fee.
Yeah.
And to be honest, I don't think that can continue forever. And I don't think other pools can also just give 0% fee to attract so many miners. So I think Foundry has become unnaturally big, and I don't think we will see so big pools in the future. At least I hope so.
Yeah.
And it's another perspective of mine from my work with business development. When I speak with miners and try to convince them to change pools to Luxor, the ones using Foundry, they do it, of course, because 0% fees, and that's completely understandable. It's they run a business; they have to reduce the costs, and Antpool too. Like you can also get very low fees on Antpool, and like most miners, to be honest, they're not really care. They just choose the cheapest option. That's what they do, and that's fair, but unfortunately, it's not so good for Bitcoin.
Yeah. Well, I made a comment before about operating within the ethos of Bitcoin, and one of the mantras of my company, and that I reiterate to our team, is that everything we do has to be within the ethos. That And I think that's the problem with the public company in certain degree, is if they have a choice between a 1% fee and a 0% fee, the pressure of being a public company and not being able to take the long-term optics and saying, well, this really isn't healthy for the industry, I will sacrifice 1% for the greater good of, they'll never make that decision, right? That would be insane, especially when they're struggling. They're not going to go pay 1% instead of 0%. But like I said, that makes them, an enemy of Bitcoin. That's a bad word, but I'm trying to paint that as like, hey, they're not putting Bitcoin itself as the first and foremost objective of their organization. And that's just the way it is.
Yeah, and when you're a public company, you have you actually have the you are required by the law and your duty to the shareholders to always maximize the
right
profits, and so but it's still 1% is not that much. And when you see public companies, some of them donate to charity and spend all this money on other initiatives. So
yeah,
it might be they can see this 1% higher pool fee, or even 0.5% higher, as a kind of donation to the Bitcoin ecosystem.
Yeah. Yep. Well, I know that you have a stop coming up. I want to maybe bring up one last topic, because it's very, I think it's created some controversy, but also some excitement, and that's what's happening with ordinals and block space and fees. And so, in the interest of time, maybe just I'd love to get your perspective on it, of what does it mean now, and also, is this a driver toward higher fees for miners in the future? And I'll let you speak.
To be honest, I'm not the correct person to ask about it. I haven't looked into this ordinal stuff at all. We have some guys at Luxor who are really into this stuff. So Luxor actually bought Ordinal Hub, which is a trading platform for Bitcoin NFTs, and we also minted the first, or not the first Bitcoin NFT, but it was a big block of a Bitcoin NFT.
Yeah,
I'm not involved in this stuff. I'm not against it by any means. I think if it's possible to do this on Bitcoin, why not do it? It's the free market can do what they want with their transactions, but immediately when I hear the word NFTs and see this NFT figures, I just don't want to touch it.
I know me, I have that
screams noise. Just I think my brain says that this is something that will go away in few months and we will not hear about it again. But at the same time, I know that I shouldn't be arrogant. It might actually become something big. Who knows? It's my thoughts.
Well, I am not an expert myself either. I'm trying to get at least a cursory level of knowledge. I do completely support the ability of any individual to make whatever kind of valid transaction they wish to make using the network. And I think that it comes back to that comment about censorship. If we start to say certain addresses or UTXOs or whatever are invalid, well, then, that's a form of censorship. This would be another, I think, form of censorship, to say that somebody's desire to put a JPEG and use the Bitcoin network as a way of what would be the memorializing that. Who am I to say that's right or wrong? I am excited. Before we got on today, I was looking and I saw that we had a backlog on mempool, there was about 130 blocks behind, which is a big number, at least by historical norms. And it's been consistently that there would be several dozen blocks behind, or even, over 100 on a very frequent basis. So, that's been good. And as I mentioned before, I think with having those within the mining industry, when we look at the time period of 2024 to 2028, if fees returned to, let's say, 5% of the block reward, or 8% or something like that, that's material. It will make a difference in the income streams of miners.
Yeah, I agree. Like if these ordinals can set a transaction fee floor, of course, as a miner, I think it's good.
Yeah. Well, Jaran, I know that you have it's the evening for you. You've given up a lot of your Thursday evening to spend with us, so thank you so much. Anything you want to say? You want to point people to your work, and we will include all this in the show notes as well. But
yeah, thank you, Bob. I would send people to Hashrate Index, where we publish a lot of mining research. You can also subscribe to our newsletter there to get a couple of articles a week in your inbox. And Bob, thank you so much for having me. It was a very well spent evening, and a pleasure talking with you.
Oh, thank you so much, Jaran. And to everybody out there, Hashrate Index is a fantastic resource. Take advantage of that. It's really, really good work that Jaran and the rest of that team do. Really good stuff. So don't miss that. Well, thank you. You have a great evening, Jaran.
Thank you, Bob.
I hope you enjoyed the conversation with Jaran. His analysis of mining and its key players provides essential insights for anybody involved in the industry. Please follow his work at hashrateindex.com and also with Luxor. He's also a must follow on Twitter at Mellerud, JMELLERUD. Mind Your Business is brought to you by Barefoot Mining, and if you'd like to support this show, please look at the donation links later in the show notes. Music in the intro and outro is from a song called Flight by my friend and fellow Bitcoiner, Jordan Critz. Check him out on Spotify, iTunes, or your favorite music platform. Thanks to all of you for spending your time with me and Jaran on Mind Your Business. The show was recorded on March 9th, 2023, and nothing within it should be construed as legal, tax, or financial advice.